Most people think a credit score is just a number. They see it fluctuate, they get frustrated, and they treat it like a mysterious weather report that they have no control over. But here's the cold, hard truth. Your credit score is not a reflection of your worth. It is a game of reporting. And like any game, once you understand the rules, you can stop playing it by luck and start playing it by strategy. If you are tired of being held back by a score that doesn't represent how responsible you actually are, you need to stop thinking like a consumer and start thinking like a lender. Everything starts with one fundamental misunderstanding. Most people believe that using a credit card and paying it off at the end of the month is the perfect way to build credit. It is a good way, sure, but it is not the fastest way. In fact, it might be the very thing holding you back. When you wait until your statement closing date to pay your balance, you are handing the credit bureaus a snapshot of your debt. If you have a $2,000 limit and you put $1,500 of expenses on that card, the bank reports that you are using 75% of your available credit. To the algorithms that calculate your score, that looks like distress. That looks like you are leaning too heavily on borrowed money, even if you have the cash in your bank account to pay it off the next day. This is the credit utilization trap. The secret is to decouple your spending from the reporting cycle. You should never wait for that statement to arrive. You need to log into your account every single week. Treat it like a ritual. Every Friday, you log in, you see the pending charges, and you pay them off. By the time your statement closes, your balance is effectively zero. The bank then reports a zero or near zero balance to the bureaus. Your utilization drops to almost nothing, and your score starts to climb. Not because your habits changed, but because you mastered the timing. But what if your credit limit is too low to begin with? This is where the second strategy comes in. You need to leverage your existing credit history without taking a hit on your score. A hard inquiry from a new credit application can ding your score for several months. Instead of opening new accounts, call the number on the back of your card. Ask for a credit limit increase. If you've been a customer for 6 months and you have maintained a good payment history, many banks will grant this request instantly. And here's the kicker. Many of them will do it without a hard pull. When your limit goes from $2,000 to $5,000, your utilization ratio instantly gets cut in half, even if your spending habits stay exactly the same. You just increased your score by changing the math, not by changing your life. Now, let's talk about the silent killer of credit, the age of your accounts. The algorithm loves stability. It wants to see that you've been a trustworthy borrower for a long time. This is why you should never, ever close your oldest credit card. Even if you don't use it, even if it sits in a drawer gathering dust, keep it open. If it has an annual fee, call the bank and ask to downgrade it to a no-fee version. That single account is the anchor of your entire credit history. It pulls up your average account age, which makes you look like a seasoned, low-risk veteran in the eyes of the financial system. Closing it is like throwing away years of positive history. It's a rookie mistake that can cost you dozens of points overnight. You also need to automate your defense. We're human, and humans make mistakes. We forget due dates, we miss emails, and we get busy. But in the world of credit, one missed payment can wipe out a year of progress. It is not worth the risk. Go into your banking app and set up autopay for the full statement balance today. Do not settle for the minimum payment. The minimum payment is a trap designed to keep you in debt and paying interest. You want the full balance. Even if you are manually paying your card weekly, keep that autopay active as a safety net. It is your fail-safe. If you're away on vacation or dealing with a personal emergency, that payment will go through, and your credit score will remain untouched. If you're just starting out, or if your score has been damaged, looking to becoming an authorized user on someone else's account, find a family member with a perfect track record and a card they've had for years. Ask them to add you as an authorized user. You don't even need to possess the physical card. The moment they add you, their positive payment history and the account's age are added to your credit file. It's the closest thing to a shortcut that exists in the financial world. But be careful, you're hitching your wagon to their horse. If they start missing payments, your score will suffer right along with them. Only do this with people who are as disciplined as you're aiming to be. We need to address the obsession with credit scores. It's not a vanity metric. It's a key that unlocks better interest rates, lower insurance premiums, and higher borrowing power for when you actually need to leverage capital for a business or a home. When you get to a score of 760 or higher, you reach the top tier. At that level, you're not just a borrower, you're a preferred client. You get the best terms, the best rates, and the most favorable treatment. Stop viewing credit as a hurdle, start viewing it as a system. The banks are using a very specific, logical, and repeatable set of rules to judge you. Once you realize that the system is not judging your character, but only checking the boxes of utilization, payment history, and account age, the anxiety disappears. You stop being a passive participant and you become a strategist. You keep your balances low by paying early. You keep your limits high by asking. You keep your account age long by holding on to your history. And you keep your payment record clean by automating the process. This is not about being rich. It's not about how much money you make. It's about how well you manage the data points that the financial world uses to define you. The people who have the highest credit scores are rarely the ones who make the most money. They're the ones who are the most boring with their finances. They're the ones who don't miss payments, who don't let their balances spiral, and who don't apply for cards they don't need. They treat their credit like an asset that must be protected. If you can replicate that level of discipline even for just a few minutes every month, the score will take care of itself. It is not a race. It is a slow, steady, and inevitable climb to the top of the reporting hierarchy. Stay consistent, keep your utility low, and let the math do the heavy lifting for you. You are in control of the score, not the other way around. Keep your eyes on the long term, and you will build a reputation that opens doors for years to come.